Next one we have FCL. FCL is Finiotex Chemicals Limited. Okay, this would be name number one in our list, and this is a very interesting one. There is one big issue in this name. The issue is the management has kind of reduced the face value and done the bonus thing and stuff, split and like that for so many times that it is now a penny stock. I mean, a 30 rupee stock. I mean, it should not be like this. I mean, for a good quality stock, I mean, the retailers, the retailers might love such a name. Okay? 10 rupee, 5 rupee, 15 rupee, 20 rupee. Okay. The retailers love the names because they need large number of shares. I mean, out of 1,000 rupees, if you buy 200, 300, 500 shares, very nice. Okay. Those are great companies. Okay. If a company has a share price of 1,000, 1,500, 2,000, it's very difficult for them to buy even a single share. Okay. That's costly. I mean, this is the perception how market actually works. Okay. So price is the perception ultimately, not the valuation. Now, again, that is the only issue that I feel in this case, like a penny stock and stuff. I don't usually trade or invest in stocks below 30 rupees and like that. But let's see, I'm analyzing this one. What has happened is it has been a good company. I mean, in all the cycles, it has been a good company. After the COVID, even it has been a good multi-bagger. Earlier, it used to be known as a textile chemicals company, primarily a textile chemicals company. It's a very niche domain. So for last few years, 2 or 3 years, textiles are doing very badly. I mean, the last year was the one of the worst years for textiles. A lot of global uncertainties and stuff like that happened, and also since it's textile facing chemical company and it faced the brunt of it. Okay, the story in this case was it started to diversify away from the textile chemicals business into high performance oil chemicals business. Okay. And that's a very good business. If you look into a lot of companies, even if you look into Yasho and several other companies like Ether Industries, everyone is venturing into oil chemicals or performance chemicals that go into oil, and two big major companies who are manufacturing oil products, right? So, and that's a very good high margin business ultimately. Okay. Now, what has happened is now it's primarily an industrial oil, or I can't say actually oil, but industrial chemicals based company right now, and facing the hygiene, FMCG, and one more segment is there. So basically, it's right now catering into four segments. Number one being industrial, then you have the textile chemicals. Number three being your hygiene or FMCG chemicals and stuff like that. Okay. Now the story is very interesting now. So basically, it is consolidating for last. Uh, Let me check out. It is consolidating for last 4 years. Okay, 4 years it has gone nowhere ultimately. Okay, it's a 4 years base, which means that valuation derating might have happened and everything digestion is done. It tried to break out prematurely around this level. Again, there's a false breakout. Again, came down. Tried to break out. Again, false breakout and came down eventually. Then it tried to move, but ultimately there is a lot of resistance on the left hand side. Again, it failed. It came down, triple bottom. Okay, this formation is triple bottom. That is why it becomes very interesting. So the recent fall that has happened, that has led to a very nice triple bottom formation around this level, and then a sharp recovery, reversal recovery happened, and it almost doubled. I mean, from 19 rupees, it has made a high of 36 rupees. So almost more than 90% kind of move happened in one go. Okay, from this level to this level. That's a very good sign. And the recent move that has happened is almost very nice. So basically, earnings came on, I think, before 18th, obviously, before 18th, earnings came. And with this volume, the stock gapped up and it made upper circuit of 20%. Okay, done. Next day, again, another gap up happened and stock moved 8.8% with a further high volume and then closed around the highs like this. Next day, again, 2.7% move and a bit of lower volume. So, based on the earnings, we can see that 3 days, massive up move happened from a low of the close low was around 25 rupees. Then it made a high of 36 rupees in 3 days. Okay, That's a massive, massive move that has happened, and it is above all the moving averages. And in next 2 to 3 days, you can see a golden crossover happening, and everything is turning green and stuff like that. So right now it is extended for sure. For sure, it is extended. Okay, we should not touch this name at this point of time. We need any consolidation like this. Okay, it should consolidate on the right hand side, form some base, and then we'll see what to do. Okay. But this is the breakout candle, like 31% move in a single week with a very high volume. It cannot beat this volume. Okay, this was 5.25 crores. This is 5 crores. So by 25 lakhs, it missed, right? That is fine ultimately. It is the second highest volume after this one. That's completely fine, right? Now, coming to the story, why this happened, right? For this, we have to move to screener and see what has actually happened. I'll just move to screener and then we'll discuss further. So I hope people can see my screen, and we can see this is Finiotex 3,800 crores company. P is moderate, I would say, not so high. Market cap to sales is 5. It is kind of high, and the reason being it's into a niche category. I mean, earlier also people used to treat textile chemicals as niche. Right now, the thing that it is doing, like oil chemicals and industrial chemicals, that's also kind of niche. So this valuation would be high, and that too after this recent rally, like this massive rally that has happened, it's kind of elevated. The rally happened because suddenly within a quarter, we can see that 162% top line growth has happened, 58% bottom line growth, 81% EBITDA growth has happened. Right? That's massive. I mean, this is a very, very massive growth that has happened. And the margin also high. I mean, 14% PAT margin and the operating profit margin. If you see latest quarter, 14% kind of operating profit margin. That's also kind of high. And below that, one issue number two after the price is kind of cash flows. So suddenly for this year, the cash flow has turned bad, right? So that's a bad sign, but return ratios are kind of great. I mean, more than 20-25% kind of return ratios. And if you see above, it's also kind of decent. So return ratios are kind of great. I would say valuation is kind of okayish, I would say. And growth is kind of bombastic in latest quarter. Okay. I'll go down and see whether the valuation derating has happened last 10 years or not. So as we can see that suddenly the sales breakout has happened this quarter. If you can see this breakout that is happening, this is sales breakout. I tried last quarter also, but the market did not respect. I mean, the price kept on falling. But this quarter is the sales breakout quarter in last 4 years, right? And that is why you can see the price breakout also happening. So sales is around all-time highs. And you can see the valuation. Valuation is around mean that was there in 2017 also. So valuation is kind of uh, at a mean. And if we see EV to EBITDA also, it's kind of breaking out. It's around EV to EBITDA is around mean, and the sales is kind of breaking out. Sorry, EBITDA is kind of breaking out. This one, EBITDA is kind of breaking out. And then price to book, if we see, price to book value is kind of increasing every year, and price to book has reduced below its mean, and then it's trading around the lows of last 10 years, right? Mean of last 10 years, that's good. Sales and margin, if you see, it's a stable one ultimately, and this is the latest quarter of quarterly sales breakout. And I'll move down and we'll see what has actually happened with respect to quarterly analysis. So you can see that it was doing nothing prior to this quarter, obviously. 1, 2, 3, 4, 5, 6, 7. So as you can see, almost for 7 quarters, or say barring about 27%. So all these quarters, right? Nothing happened actually. Okay. So actually from 2022, nothing happened special that was sustainable and like that. But suddenly, as you can see, 314 crores. Now, if you do the sum total of multiple quarters, you would see get this number, right? This is very high, but on the expense of margin. I mean, there is negative number three is the margin. So earlier the margin used to be in the range of 24-25%, but right now the margin is kind of lowest in almost all the quarters, is around 14. But the guidance from the management is that they would settle somewhere around the margin between 18 to 19%. Okay. And that is still not close to what it used to do right here. Okay. So that is again issue, and that is issue number three. But from this point also, the margin has the probability or the capability to go up to say 18 to 19%. If we look into the annual sales, right? So this is the sales breakout year wherein it was doing nothing for last 3 years. Okay, nothing. Again, 9,200 crores, nothing. Now this is the sales and profit breakout year. Margin is not at par, but still sales and profit is at par. If you look into the capabilities from the time it has been consolidating, right? 84 crores were the assets. Right now, the asset is around 280 crores. So they have kind of tripled the assets. And in this includes also their golden or the star acquisition that they have done in the US. So there's a company called as CCT. CCT is Crude Game Technologies. So this is the company that they acquired last year in the United States. That company is into oil chemicals. Okay. Now it has two advantages right now. Basically, it does not have to manufacture the chemicals in the country and then export to the US since US is the largest market. US is the booming oil market right now. Just remember that. If you don't have that clue, just understand US by means of fracking, it is doing great things in the oil segment right now, and all the oil majors are doing great right now in the US. So the advantage right now is it has acquired a company, oil or chemicals company in the United States, and they are manufacturing there and supplying there only. From the US, it could supply to the Europe and elsewhere, and again, that market is still open for this company. And due to that thing only, like they have acquired kind of 53% stake in that company, and they also have the clause or agreement to acquire further 25% by January 2028. Okay, the stake could increase to 78% ultimately. Now, the story is that business is booming very nicely, and that is why you can see a very nice boom in the quarterlies, right? The current annual run rate in that business is around 100 million USD. And the management, again, during the acquisition, told that they have the target to double the top line to 200 million USD by FY30 in 5 years, actually. Okay. Now, in this quarterly con call, they have told that it would be done by FY28. So they have reduced the number of years by 2 years. And they are saying that the growth is very fast and they have to do the capital expenditure there. And the 200 million USD target could be achieved very easily. That is point number one. Number two growth factor is they have done the capital expenditure in the country, in India itself, and that is where they would be ramping up in next 1 to 2 years. And the ultimate thing that the management told in the con call is with everything that is there in place, right? This company could do 3,000 crores top line by FY28, right? So by FY28, yes. Within next 2 to 3 years, I think, yeah, 3 years, they have told that they can triple the top line. Okay. And a very specific question was asked by the participant in the call around, I think, 45 minutes, 50 seconds or something. He specifically asked that whether 3,000 crores top line could be done or not. The management told that it's very doable for them, and they would be surprised if they are not able to do it. Okay. So this company is doing around 700 crores kind of top line right now, and this is saying that they could do a top line of 3,000 crores. Okay, you should go and check the con call. And this is one of the massive stories right now in amongst all the con calls that I have heard till now, because I verified by hearing the con call itself whether I've heard it correctly or not. Okay, that is true what they have told. And that would come from two things. Number one being the capital expenditure that they have done in the country. Number two, the crude chem technologies company that they have acquired, and that would further ramp up the top line, and the margin would increase towards 18 to 19%. Okay. Cash flows, there has been some issues in the cash flow that they have agreed. They have clarified that yes, there has been some issues, and majority it is due to the acquisition that they have done. They have included some expenses in the cash flows itself, and that is why you can see it negative. It would turn positive this year, is what they have told. It was kind of good in last 3 years, and this is what they have told. So I think I would not take it as that negative as a whole. Next is we have return ratios okayish, and we'll come down to promoters and shareholding. Very decent shareholding is there. 62% shares are being held by the promoters. FIs are increasing their stake, and right now 2.92%. DIs are kind of reduced. They have reduced massively from 3.65 to 1.27. There is okay. Negative number four. Negative number four is a lot of retailers are there. I mean, if you pick up from the start, like 2023, make it yearly, right? Yeah, 2023, right? So from 23 till date, right? It's kind of a massive increase in retailers, and that is what I was saying that okay, it's not a good strategy to reduce the share price to 20 rupees, 30 rupees. I mean, it's very easy for retailers to just grab and then hold and like that. And anytime if it goes up, it would be traded and then it would be sold off, and the rally would not be very nice and like that. Okay, that's an issue that we are going to face in the future. Okay, so okay, this was everything on Finiotex, and I'll move towards again the screen, and then we'll conclude if we have anything further remaining in Finiotex or not. Okay, just let me check it out. Okay, and if we look into Finiotex, yeah. So Finiotex, we have talked about that the mix is changing towards your oil and gas specialty chemicals. So almost 60% belong to oil and gas specialty, and your 36% came from your textiles. Now they also have the plans to diversify into other geographies like Middle East. Obviously, being a company manufacturing oil and gas specialty chemicals, Middle East is an obvious play. Okay, so basically, once this stabilization is there, then Middle East is one segment that they would target, and obviously Europe is there, so they would target Europe and Middle East from the United States, and ultimately they are tariff free. I mean, they have the company there only, so that is there. Next is the city is a very good acquisition, is what I believe. Okay, I've talked about the 200 million target that they have kept, and yes, they have increased the timeline that 200 million could be done by FY28 itself. They have done a capital expenditure of 7 million in that business CCT, I think last year. That's a good thing that they have done. Yeah. Okay. So we have to search about everything. So we have to track and see if 3,000 crores top line remains a nice doable goal or not, or the management falters or not, and if the margin expansion happens. So to sum it up, this is the story of sales expansion or massive sales growth in future that the management has promised. Number two, margin expansion. The margin is around 14%, which is very low as per the management. They can easily go to margins of 18, 19%. That is number two. Number three, if there is any debt, if they can retire the debt, that could be done. And finally, the operating leverage play. Ultimately, they have done some great capex in last 2 years, and there is also further capex lined up for them. So if operating leverage has to play out, then the bottom line would expand massively. So it's a multi-year base where we can see this is a 4 years base candidate, which is kind of gapped up in the recent earnings, and the earnings were bombastic, and the con call was super bombastic. I would say amongst a lot of con calls that have happened this year, this is one of the massive stories where the management has outlined some massive roadmap or plans. We'll have to see if the management actually plays out or walks the talk, or what happens going forward. Okay,